looked at a whole bunch of data points there that, from a historical point of view, demographic, location, dwelling. So it's really given us a really good understanding of the suburb as a whole and what's happened in the past and its demographic makeup. But for those that are wanting to invest now or in the near future, it's also good to know what's been going on in the marketplace right now or of late, so you can figure out if it's a good time to buy, right? We're sort of understanding if it's where to buy, and it sounds pretty good so far, but is it the when to buy, right? And we can sort of break down what that's looking like right now. So the median house price in Kewarra Beach as of November 22 is currently $676,000, and it's actually up from $639,000 in July 2022. So we've seen the median price grow by 5.7% in the last 3 months, right? So yeah, obviously, there's this widespread doom and gloom in the media around the property market crashing, right? Around, certain markets retracting, going backwards. But we can sort of see here, Kewarra Beach is actually done quite the opposite, right? And this is despite those, consecutive interest rate rises, right? And from a median house price point of view, it's done very well over the last 3 months. Look, no one has a crystal ball as to sort of where it's going to go, but we can look at some supply and demand factors as well, and we'll continue to look at that to really get a grip on how the median price is likely to perform going forward. But yeah, guys, what's happening now in the marketplace is certainly very positive from a median house price point of view in Kewarra Beach. So we can see here in terms of stock levels for Kewarra Beach, they're now sort of sitting at 0.5%, which basically means that there are approximately 13 properties currently listed in November for sale across the whole suburb, and are sitting just under the 2-year average of 15 per month, right? So in terms of, Kewarra Beach, what it has over, 2,000 households or dwellings within the suburb as a whole, and to have roughly around 15 active properties for sale each month on the marketplace, as a whole, I think that's very low, and currently sitting at 0.5% now just goes to show that, yeah, if stock levels remain low, and particularly demand, if that remains strong, then you're still going to be in a situation where, generally people that are active in the marketplace, are bidding against each other or fighting over property, right? So when stock levels are extremely tight like they are in Kewarra Beach, we're probably likely to continue to see what might be a heated market here continue to play out. Like we've obviously seen the median house price grow over the last 3 months. This could probably be one of the main factors as to why that's the case. So there are still a lot of active buyers in the marketplace, but there's just not enough stock or supply, right, to sustain that demand. So we still end up in a situation where people are continuing to bid against each other and then driving up that median house price. But yeah, that is very alarming when you start to see, these really, really low levels of stock. And there's a great correlation between stock levels and inventory. Yeah, so we can sort of see here that inventory levels continue to show a downward trend with roughly 1 month's worth of inventory available in November, right? So we have sort of, let's say, 15 properties on average that come onto the marketplace. We could probably say that, the best part of just above 50% of those generally sell, each month, right? And then the remaining stock that don't sell tends to roll over into the following month. So then we have a sort of a rolling average of around 1 month's worth of inventory, on the marketplace. But yeah, if the market were to go into redundancy tomorrow and all we're left with is the existing stock, then we've only got 1 month's worth of inventory there available based on the velocity of sales we see within the suburb. And yeah, from a supply point of view, once you start to look at the supply dynamics, we can start to see a real tightness here in supply. And if the market were to continue to bubble away and be heated and prices to continue to grow, seeing low levels of supply is definitely a good thing, when it comes to, chasing that capital growth or chasing those higher rental yields as well. Because when you have such limited supply, that's going to put downward pressure on existing properties prices. So yeah, a really good thing from the supply side here, guys, in terms of inventory market. Now we're sort of going to peek ahead over to the demand side, and it's going to really start to paint a picture as to sort of what's going on the demand side now that we sort of got and understood like there's like low levels of supply, right? We can sort of see there's the best part of 1 month's worth of inventory, and then we've got sort of a rolling average of around 15 properties coming onto the marketplace at any given time each month, right? And then we can start to see the demand now. I suppose these sort of levels of data really sort of give us an understanding of what the demand is a really good metric to understand that. And so days on market essentially means that, for every property that comes online, right, and then changes ownership, right, from seller to buyer, it's taking roughly, 20, or what's here, it's got 32 days for property to change hands. And overall, like that's a very heated market where, you're sort of that sub 35, because you generally can't really go any lower than 30 days on average anyway, because the average contract period takes around 30 days for a standard settlement anyway, unless there were a lot of unconditional contracts or a lot of cash buyers where you don't necessarily need, the 30 days for settlement. But on average, most people are putting in an offer subject to finance, subject to billing and pest. Most people take around 14 to 21 days for that to happen. Once those two clauses of the condition are generally met, then they generally opt then for settlement to occur roughly 8 to 12 days after that, and that sort of creates that average of around 30 days in terms of settlement. But yeah, from a trend point of view, yeah, it's still very, very low. It sort of peaked there mid-year, and then now it's sort of dropping again and still showing signs that, yeah, the market is still very strong. And days on market, if we continue to sort of see it remain at these low levels, then we sort of know, yeah, the market is continuing to just claw away and be heated and hot. And then we're going to see a correlation between days on market with the continuing growth rate of the median house price. Use buyer view per listing on realestate.com actually gives us really good data, and it sort of tells us really what the demand is looking like online, right? A lot of buyers out there, generally before they go and have a look at the property, right, they're on realestate.com.au, and as the listings come live, right, clicking on various listings, and realestate.com.au is able to create an average per property of how many buyer views it gets, right? And yeah, we're sort of seeing here for Kewarra Beach, right, 2,496 buyer views per listing, right? And this actually sits well above the state average per property and well above the Cairns average, right? I don't know if there's just a ton of window shoppers here, but what we're seeing here is, per listing, right, is a very high click rate in terms of for every property that is listed on realestate.com.au that has a Kewarra Beach postcode on it, it's getting over 2,000 views, 2,000 buyer views, right? I'm not saying that, yeah, there's 2,000 buyers pent up waiting there, but it's well above, the state average, and it's well above the Cairns average. And that, as a data metric, really paints a picture for us as well to know that, there are a lot of people, either actively looking right now or window shopping in the area, when you have that many amount of people. And what was it, 15, let's say 15 properties on average coming onto the marketplace each month based on the supply metrics we looked at before. And if you got, over 2,000 potential bidders there, and on average, 15 properties per month, then that's a major imbalance there between the supply and demand. So we might have, you know, still have a heated market here, still playing out in Kewarra Beach because supply just can't keep up with demand right now. And what the absorption rate looks like, right? The percentage of properties that are being consumed versus going online, right? So overall, Kewarra Beach is actually experiencing a fairly low absorption rate of late. So in the last 3 months, from basically September to November, it's sitting around 41%, and that's virtually way under its extreme high of 91% during May to July. So funny enough, we've seen that median house price continue to claw away, but then, this is sort of a polar opposite to that, where this absorption rate is fairly low, right? So what this is essentially telling us is that properties that go online, right, are roughly 41% of them are selling. So the good thing right now is that they're selling and the market is still moving in a good direction, but that absorption rate has dropped from 91%. So virtually, a 50% drop there in the amount of turnover in stock. So we might be starting to see sort of the demand side taper off here. But generally what we find virtually from October to November, there is a natural tapering off of buyer demand as most families are getting ready for the festive season, right? What they're getting their kids for Christmas, where they're spending Christmas holidays. So there's a natural tapering off there, but for it to virtually almost fall off a cliff since July is pretty alarming. And this absorption rate, it is something to watch, because now that the absorption rate is trending really, really low, we now need to look at whether or not properties are going to start to discount themselves and start to sell much more lower than what the expecting asking price is. And when we start to see a lot of those properties discounting, that's probably where we're going to start to see a slowdown or retraction of the median house price. And there's a great correlation between the absorption rate and I suppose people starting to discount their houses. Right? If you think about it, if you've got your property on the market, right, and there's not a lot of buyer demand, then you generally have to try and lower your prices to try and get a potential buyer through the door. So we might start to see maybe a retraction in that median house price occur in Kewarra Beach, but overall that absorption rate is very, very low and is something to certainly keep an eye on going forward. We poked our head over. So if we picked our head over and had a look at what's going on in the rental market now in Kewarra Beach, particularly those that are looking at chasing, good solid yields. So we can see here that the median rent continues to follow the rising trend, actually, now sitting at $552 per week for houses in Kewarra Beach. And this is actually up $6 or 1.1% since August 2022. So we can sort of see here, that this median rent continues to rise, right? And we'll have a look at what the vacancy rates look like in the next slide. But the vacancy rate has a great correlation between, where this median rent is going to go, because if supply is extremely low, then that's going to continue to put downward pressure on new supply, right? And then people will have to then, come in and even try to outbid each other for rental properties. Unfortunately, we've heard of cases where people are now having to put down the best part of 6 months in advance just to secure a property in these locations in Cairns itself. So yeah, very alarming when you start to see, median prices for rents jump $6, every quarter. And if you sort of round that out over the course of 12 months, right, 6 times 4, that's $24 over the course of 12 months. The median rent is increasing, and yeah, it's going to certainly hurt those that are renting. However, for those that are investors looking to cash in, then you can certainly get a very, very attractive yield in and around Kewarra Beach right now. At a high level, what the vacancy rates look like and the vacancy rates, for those that are investing, it's good to get an understanding of, what the level of supply is on the rental market, because then you sort of know you're going to still get a premium for your investment. If it then goes onto the rental market, you're going to get, basically what the median rents look like now in real time, and with these vacancy rates, sitting at 1.1%. So that means that there's only 3 vacancies currently available for rent in a suburb of Kewarra Beach's size, with so many desirable factors as we've looked at from the start. To only have sort of 3 vacancies available for rent is pretty alarming, and actually very, very low. And we can sort of see, this sort of under 1% vacancy right now. We're sitting just over 1%, but anything in and around that 1% just goes to show that it's extremely low, and we've got a small sample pool here as well, right, of, generally for the last, 2 years, the best part of, at any given month, 4 to 5 properties only available for rent. So that's pretty scary, right, for, some of its size in such a desirable location to only have, that amount of rental properties. But that's also a good thing for those that are wanting to invest. If you jag a property there for the right price in the right location in the suburb, then no doubt in a heartbeat you're going to have that property tenanted within, a couple of days of you advertising the property. But I can imagine most property managers right now will have, a whole bunch of well qualified potential tenants on their books, and it's just a matter of, you vetting them and screening them, saying, yep, we want them in, because there's already pent up demand, and in places like this that sits on the Northern Beaches, very desirable, heaps of good lifestyle drivers. Yep, there'll be, over 100 or more tenants probably waiting in the wind, ready for a property to sort of hit the market that could be a potential fit for them. But vacancy rates, man, extremely low and pretty alarming. Pretty heavy information here, both qualitative and quantitative, so it's probably hard to digest and swallow, particularly for novice investors, mum and dads that don't know a lot about these different data points and what they mean when it comes to property investing. But, overall, if I were to sort of cover off on some of the key takeaways that I like that the data is telling me, start at the top. The first one would be that, the Northern Beaches location, is very desirable, and it has many lifestyle drivers, right? So, that's generally a qualitative data point there, having all of these lifestyle drivers like the beach, the public amenity, the parklands, the schools. You can't really measure that in terms of data, but you can measure them qualitatively to measure their desirability, and a lot of those, are there in Kewarra Beach, and it makes the suburb, as a whole, a very desirable location with good lifestyle drivers. So that's number 1 for me, guys. Number 2 is, after looking at the demographic data, we can see that, it's underpinned by a good demographic, right, that have above average incomes, and that's what we want to continue to keep driving property prices up, right? And as a side note, I actually then looked at what the average mortgage monthly repayments are going to be relative to income as a percentage, right? And we can probably see here that mortgage repayments relative to income as a monthly percentage is only 21%, right? So there's a lot of wiggle room there in people's incomes to pay more or well over and above their current median property price. So based on that 21%, I'd probably say, the median house price could push up to, another 750,000, close to 800, before we start to move to that, sort of 30%, 35% threshold of your monthly income being absorbed by mortgage repayments. So the demographic within the suburb can continue to pay more for property, whether it be purchase or rental, which is a good thing. So you really want to have that really good demographic and not be in a slow socioeconomic part of town. Number 3, we can see that it had a good blend of housing stock. You had the substandard suburbia homes, you had the acreage, and you had the waterfront property. So there's a really good blend of property there, and different price points as well, right? So if you've got a high-end budget and you want, particularly if you're an investor, chase capital gains only, then obviously if you buy something and you're not unconcerned about positive cash flow, you buy something in and around the waterfront, scarce, and then something generally out in the acreage areas where the higher price points are and the extreme scarcity of that type of stock sits, right? So yeah, really like the housing blend there, guys. And if you sort of divide that as a percentage up out of 100, there's a really good mix there, right? There's not, overly dominated by one particular type of housing stock. There's a really, good blend there, a good variety of stock, which makes the suburb very diverse, and it gives a lot of investors and home buyers choice as well, and not necessarily pigeonhole people into buying, only one type of asset, which isn't ideal. Number 4, we've got a limited amount of housing supply in the pipeline, so I really like that. You can probably see that, if you go east, you hit water. If you go further west, you hit mountain ranges. And if you go north or south, you hit Trinity Beach, and then you hit Clifton Beach. So in terms of new land supply, you've virtually got nothing left in the pipeline, right? There's only that redevelopment that's going on by Darren Haplin in and around Paradise Palms. We'll probably see another 150 residential lots come onto the marketplace, and we'll probably see that over the next sort of 3-4 years. But after that, yeah, that's Kewarra Beach done and dusted, and the only way to increase housing supply is to build up, right, to increase density. So I don't know what will happen in terms of Cairns Regional Council's appetite to rezone in and around the waterfront there to increase density. Kewarra Beach that hasn't necessarily happened in and around Kewarra Beach, but we've seen that happen in other Northern Beach suburbs where density zones have changed. But yeah, for the most part, yeah, Kewarra Beach right now has very limited amount of new supply, and from an investment point of view, that's great, right? Because we know that new supply is the enemy of capital growth, right? So when you have limited new supply and you have ongoing demand, then that just means that once your supply is capped, then people just have to try and bid against each other for the existing stock, rather than wait for something new that's going to come online and be built. And that's where we start to see, capital growth continue to sort of claw away when people are bidding against each other because supply is low and demand is strong. We look at number 5, it has a good track record, particularly with its median house price. Didn't do overly great over, the best part of 8 years there. It was relatively flat, and then it obviously exploded. But it hasn't gone backwards. As a suburb, it hasn't gone backwards, or it's not up and down. So, for me, that track record is pretty good, right? There's not a lot of red flags for me there in terms of its track record. The median house price, has been flat, but it hasn't gone backwards. And then the median rents, we've sort of seen that trend line of the median rent just continue to move in a really good direction there. So it's got a good track record for both the median house price and median rents. And that's going to be a really, really good thing if you're investing, because that takes away a lot of that risk, right? Am I investing in an area that historically hasn't done well? No, in this case, it's quite the opposite. You'd probably be investing in a suburb that's done, pretty good, hasn't went backwards. Number 6, we can see from the demand side metrics, that demand is still very high, right? So we've seen, the click rate there per property that goes online. We've seen the absorption rate, and we've sort of seen days on market, and all of those sort of show signs that demand is still very strong, right? And if the supply side continues to remain low, then we're probably still in a situation here where the median price will continue to grow in the suburb here, because demand and those different data points and those metrics we looked at, it shows that it's still very high, right? And there's steam in the marketplace, right? We've seen a massive upkick over the last 2 years on that median price, and it exploded, but it looks to me like it's still got steam in it to continue to sort of push further north, right? And one of the things I didn't cover within the slides, but I put it here as a really good summary around the suburb as a whole. If you actually looked at it in comparison to its 2 northern neighbours, right, Palm Cove and Clifton Beach, right, it actually is still very affordable when you start to benchmark it and compare it to those 2 suburbs, right? So you got Palm Cove, right, with a median house price of just over $1 million, and you got Clifton Beach has a median house price of $900,000. So, Palm Cove is around $300,000 to $400,000 higher, and Clifton Beach is around $250,000 to $300,000 higher, the median house price, right, than Kewarra Beach. And these suburbs are only 5-10 minutes away, and you have a lot of still the same amenity, Northern Beaches location. So if you start to benchmark it against those suburbs and what they've done, we still see that Kewarra Beach has a lot of wiggle room to sort of move in the same direction as those suburbs, because even as those suburbs continue to grow as well, like Clifton Beach and Palm Cove, a lot of people will go, oh, I'm a bit priced out of those suburbs. Now they might start to look at Kewarra Beach and then come into that marketplace and drive it up. I'll probably say that Kewarra Beach doesn't have the same quality housing stock as Palm Cove and Clifton Beach. In terms of like your more modern, larger, better finishes, a bit more of a premium quality housing type. So hence why that median price hasn't really performed the same as those suburbs. But in saying that, it provides a great alternative for those that, let's say, have a $1 million budget, right, but don't necessarily want to buy something on the lower end in Palm Cove for $1 million, but rather buy a $600,000 house in Kewarra Beach and spend another $400,000 on renos. So we could actually see the market start to gentrify in Kewarra Beach, because those that might be priced out of those other markets, or they're probably not priced out, but they choose to go, rather than buying an average house in Clifton Beach, I'm going to buy an average house in Kewarra Beach and then turn it into something I love by spending $300,000-$400,000 in it. And then we'll probably start to see the suburb really gentrifying here, guys. But that's just my own opinion. There's probably a bit of speculation in that, but it's probably a trend I've seen time and time over in other parts of Cairns as well, and that's probably my prediction for what's likely to play out in Kewarra Beach. And look, guys, this isn't investment advice here. This is just me giving a general analysis of the suburb. Do not treat this as specific investment advice. Don't go just buying any old property in Kewarra Beach now that we've done this willy-nilly. Reach out and speak to professionals, and so we can understand your situation, your goals, budget, risk profile, etc., and then find the best asset for you guys from there. But in-house, just on the subject of investing, we have a strategy that we stick to called the boring strategy, right? The boring property investment strategy. And we generally filter all of our properties through that when we work with investor clients. And if it ticks all of those boxes, then we sort of know that, hey, we're purchasing a good quality asset here. And the boring strategy essentially is location, right? Is it in a good location? Commute time, good lifestyle drivers, in the right part of Cairns. Location is number one. Number two, is it underpinned by a good demographic, right? And we can see that, Kewarra Beach had a lot of people that had above average incomes, a lot of people that had really good household formation age, which was good, and a lot of people, that are paying mortgages right now, that's only 21% of their income. And we've also seen that the demographic in terms of the suburb as a whole, 70% of them actually are owner-occupiers rather than renters. So ticking that box for me, Kewarra Beach has a good track record. As part of the boring strategy, we want to look at properties with good track records, good suburbs with good track records. And as Kewarra Beach, it hasn't been great. It's been pretty flat, but it hasn't gone backwards. And it's not a hit and miss suburb where, we've seen prices do this and that. So from a track record point of view, it's looking really good for us as well. And then what we do is we add all those three together and we minus away the supply, right? So the supply, if supply coming onto the marketplace and it is very, very high, then that sort of then makes a lot of all of those other data points irrelevant, because even though it has all of those things, if new supply continues to come onto the marketplace, then we're probably going to see, prices remain pretty stagnant and no growth there. So I want to see scarcity as well as all of these factors, and supply creates scarcity. So we've only noticed there that there's only a small amount of supply coming on into the marketplace there with that new development. So there's only about 150 residential lots coming into the marketplace over the next few years. But other than that, you're capped. You got ocean on one side, mountain ranges on the other side. So other than that, yeah, you can't really do much. So Kewarra Beach definitely ticks all of those boxes. And if we put it through the boring investment strategy that we used in house. So yeah, guys, that's Kewarra Beach. I hope that's been helpful. If you're an investor, then you've probably got a lot there to sort of really diagnose and temp check what's happening in the marketplace, and hopefully that's given you some confidence so you can go out there and pull the trigger. For those that are unsure about whether or not they want to invest right now, or still unsure about what type of property to buy within the suburb, what pocket, what street, what type of asset, then reach out to us. More than happy to sort of have a chat and go from there. But thank you for tuning in. If you have any questions, please leave a comment in the comment section or reach out to us directly if you want to unpack this a little more, or even if you want us to deep dive into another suburb in Cairns. So again, my name is Troy Simbasini. This has been proudly brought to you by Tropical Life Buyers Agency. If you do need help navigating the marketplace in Cairns, feel free to reach out anytime. More than happy to have a chat. So thank you guys, and bye for now.